And welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 30th, 2025, and we're diving into Comcast's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Comcast's performance this quarter.
Revenue and profitability overview. Let's start with the top line. Comcast reported a revenue of $31.2 billion for Q3 2025, which is a 2.7% decrease compared to last year. John, what are the key factors behind this decline?
The decline in revenue is primarily due to the absence of the Paris Olympics, which contributed significantly to last year's figures. However, Comcast's adjusted earnings per share remained stable at $1.12, matching the forecasted EPS of $1.10 by analysts. This stability is a testament to their effective cost management and operational efficiencies.
And what about their profitability?
Net income attributable to Comcast decreased by 8.2% to $3.3 billion. Despite this, they generated a robust free cash flow of $4.9 billion, up by 45.2% from the previous year, indicating strong cash management and operational resilience.
Connectivity and platforms performance. Comcast's connectivity and platforms segment seems to be a bright spot. Can you elaborate on their performance in this area?
Absolutely. Connectivity revenue increased by 4.2% to $11.5 billion, driven by strong growth in domestic wireless and international connectivity. They added a record 414,000 wireless lines this quarter, which is a significant achievement. Business services also saw a revenue increase of 6.2%, reflecting their strategic focus on enterprise solutions.
That's impressive. How does this align with their long-term strategy?
Comcast is clearly focusing on strengthening their broadband foundation and expanding their wireless offerings. This aligns with their strategy to reposition the company for sustained growth, as highlighted by CEO Brian Roberts.
Content and experiences segment. Moving on to the content and experiences segment, what are the highlights here?
The theme parks segment reported a 19% revenue growth, fueled by the opening of Epic Universe. Media EBITDA increased by 28%, driven by Peacock's performance. Notably, Peacock's EBITDA losses improved by $219 million compared to last year, showcasing significant progress in their streaming strategy.
How does this impact Comcast's overall content strategy?
These results indicate that Comcast is successfully building momentum in their content offerings, particularly with NBC and Peacock. The focus on live sports and new attractions is paying off, contributing positively to their overall growth strategy.
Investment and shareholder returns. John, let's talk about Comcast's approach to shareholder returns this quarter.
Comcast returned $2.8 billion to shareholders through a combination of $1.2 billion in dividend payments and $1.5 billion in share repurchases. This reflects their commitment to delivering value to shareholders while maintaining a strong balance sheet.
What does this mean for investors?
For investors, this is a positive signal. It shows that Comcast is not only focused on growth, but also on rewarding its shareholders, which can enhance investor confidence and support the stock's valuation.
Key takeaways. In summary, Comcast has delivered a solid performance in Q3 2025, with stable earnings and strong cash flow despite a slight revenue decline. Their strategic focus on connectivity and content is clearly paying off. John, any final thoughts?
Comcast's ability to maintain stable earnings and generate strong cash flow in a challenging environment is commendable. Their strategic initiatives in connectivity and content are setting a strong foundation for future growth.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analysis. We'd love to hear your thoughts on Comcast performance in the comments below.